I want to welcome you back to my channel. And in this video, we're going to talk about your trading plan. Pretty much it's the blueprint to your trading success. Is how you trade, is why you even trade, is pretty much everything you do in order to be successful as a Forex trader. Okay, so we're going to jump into it. I'm going to show you guys, I'm going to walk you guys step by step what a trading plan is, how to construct it, and then I'm going to actually show you guys my trading plan and what I use to actually govern myself whenever I make trades. All right, so let's jump into it. All right, you guys, welcome back. So like I said, we're going to go ahead and talk about a trading plan, how you construct it, and how it's made, and exactly what a trading plan is. Okay, so first thing is when you're looking at a trading plan, these are some of the things that you have to ask yourself. You know, what are your goals? What are your risk management? What kind of strategy do you trade? When you're taking entries, how are you going to enter into a trade and things like that? What type of trading analysis do you do, and what is your trade management? These are some of the things that you look at when you're actually going into developing your trading plan. Okay, so now the first thing that you have to ask yourself when creating a trading plan is, what is your why? And with this, I want you guys to be specific. So for example, why exactly are you trading in the first place? Are you doing this for your family? Are you doing this to buy a house, go on a vacation? Are you doing it to make money, to become financially free? This is the first question you need to ask yourself when creating a trading plan, because this is your I guess your driving force. You know, what is driving you to the market? What's driving you to actually be a Forex trader? And so this is the first thing that you need to ask yourself when constructing your trading plan. Next thing, what's your free time to trade? You know, some people have 9-to-5 jobs, some people work at night. So you need to ask yourself, when exactly can you trade? You know, there are 3 sessions that you can actually trade, which is the London, the New York, and the Asian session. The London session usually is from 2 a.m. to 10 a.m. Central Time. And New York session is from 7 a.m. to 4 p.m. Asian session is from 5 p.m. to 1 a.m. Now there is a Sydney session as well, but that one overlaps with Asian a little too much. So a lot of traders don't necessarily really take into consideration or look at the Sydney session. So we only really look at 3 major sessions: London, New York, and Asian. And so with this, depending on which pair or which session that you trade will also depend on the pair that you trade, because you have some pairs that move a lot during London, which can be your GBP pairs, maybe your Euro pairs. But then also you have pairs that move during New York, which are your USD pairs. You got pairs that move during Asian, which are your Japanese yen pairs. So you want to be mindful of whatever pair it is that you're trading. You want to govern yourself accordingly to whatever session that you have free time to trade, okay, and study those particular pairs. Next, what is your strategy? You know, what is your type of style in trading? Are you going to be a day trader? Are you going to be the type of trader where you take a trade and you can sit in it for days and things like that? Are you going to be a swing trader where you can trade for weeks at a time, months at a time? Or you're going to be an intraday trader? You know, developing your strategy will determine what type of strategy that you are, or what type of trader you are. Now, within your strategy, are you going to be the type of trader where you look at price action? Are you going to trade support and resistance? Are you going to be a smart mini trader where you kind of trade, you know, different things like Wyckoff and things like that, order blocks, supply and demand, all of that kind of thing? You know, do you use indicators? You know, there are a lot of traders out there that use indicators and they're extremely successful. So, you know, whatever strategy, you know, helps you be profitable within the market, that's what kind of trader you are. You know, are you looking at candlesticks, you know, engulfing dojis, tweezer bottoms, what is that? Head and shoulders, double tops, double bottoms, those different type of things. Entries, what time frames will you actually enter the market on? And what confluences are you looking for? You know, those are extremely important. You know, when you're taking a trade, you look at 1 or 2 confluences or 3 confluences to say, okay, it's acceptable for me to take this trade. Those are the different things that you need. And what are your exit strategies? Some people don't have exit strategies. You know, what determines for you to set your TP at a certain level? when or why to exit your trade before your TP. These are things that you must consider. If the trade is not going in your favor, do you have a plan to exit that particular trade? These are all things that build your strategy. Next, which is probably one of the most important things, is your risk management. How many trades do you take per week, per day? That will determine, your risk tolerance, what kind of trader you are. How much of your account are you going to risk when you're actually taking a trade? Now, I actually did a video on risk management, and I'll actually put that within the link right here. So if you click on this, it'll take you to the risk management video. So this is things that you must govern yourselves according to. That way you understand what's your risk management. When dealing with stop losses, where exactly will you put your stop loss? Do you use stop losses? There are some traders out there that absolutely don't use stop losses. Now, for me, that's not the type of trader I am, because I'm real big on risk management, but some people, that's how they trade. And some people are successful in doing that. So you got to develop what kind of trader you are. If you use stop losses, if you don't use stop losses, where to put them and things like that. Do you use trailing stop losses? When you're thinking about take profits, what is your daily, weekly, monthly goals? You want to look at that in terms of percentages, because everybody, we're in this market to make money, but you want to look at percentage gains. That's how you really can track and see your growth within the market. And also, do you take partials? Are you the type of person that take partials? Do you not take partials? Those are things to consider as well. Next, one of the things I wanted to do is put together like a profit goal. Like if you're a beginner trader, let's just say if you had profit goals of, possibly making, $50 a day or something like that. And if that's the case, you can see on a weekly basis, you'll make about $250. On a monthly basis, that's an extra $1,000. And annually, that's about $12,000. So if you're a beginner, you can kind of look at these three tiers here. If you're the type that want to make a daily goal of $100 a day, that will equate to $500 a week, an extra $2,000 a month, $24,000 throughout the year, and so on and so forth. If you were a type of person where you say, hey, I want to try to make six figures annually trading Forex. So with that, you need to make a minimum of about $500 a day. That's about $2,500 a week, about $10,000 a month, and that's about $120,000 per year. And you can kind of look at the other different tiers. If you want to consider being a millionaire, then from that perspective, you need to start looking at making about $5,000 a week. If you can make $5,000 daily. If you can make $5,000 daily, from there, at the end of the year, if you can make this consistently, or $25,000 weekly, then you putting yourself in the tier where you're gonna make about $1.2 million for your profit goals. Okay, so now what are the steps that can help you be consistent, or the steps to your success when dealing with a trading plan? Consistency. A trading plan will help you guys kind of be robotic and not, be so emotional and things like that. Back testing. There are a lot of traders that do not back test. Back test is an extremely important part to test your strategies to determine if your strategy actually works. Then discipline, mindset, and affirmations. Having discipline. This includes, waiting for your particular markups to play out, not catching FOMO. Your psychology. If you lose a trade, don't revenge trade, different things like that. Having the mindset. If you're going on, if there are issues or things going on in your life, don't trade. Stay out of the market, because that can affect your psychology and how you look at the market. You can become emotional. And then also give yourself affirmations. Let yourself know that you are great. Excuse me. You are trying to be the best trader you absolutely can be. Those affirmations can be important and motivational tools to help you within the market. And then last but not least, make sure you follow your trading plan. Okay. All right, you guys, let's jump into my trading plan and what I use to help myself be consistent within the market. Okay. So let's check it out. So here's my trading plan right here, you guys. And I'll also put a link in the description for a template for this as well. That way you guys can actually utilize this if you guys want to. So for my goals, the first thing I look at within my trading plan is, what is my why? And basically that's to create a better life for my family through financial freedom, to build a legacy for my kids, and also to teach them this life skill of trading Forex, because I feel like Forex is a life skill. You can teach your kids, you can teach anyone how to trade in the market. And it's a life skill that you can really use to be profitable, and it can possibly change your life. Lastly, to become the absolute best trader I can be. I want to be teachable, and I also want to pass this knowledge on to others. Okay. What are my short-term and long-term goals? My short-term goal is to make 100K before 2023. Okay. And my long-term goal is to make $2 million and allow my wife to retire. With that 2 million, I feel like that's a comfortable area for my wife to go ahead and retire. And so that's some of my goals. And then once I hit those goals, of course, I'll make other goals as well. How much am I wanting to make per week? That's between 2,500 and 5,000 per week. How many pips do I want to catch per trade? I want to catch a minimum of 50 pips. But more times than not, I look to take a 1 to 3. I don't really take anything less than a 1 to 3 when I'm trading. Okay. What pairs do I trade? Most of you guys, if you follow on our YouTube channel, you guys know I do gold, GUEU, USD CAD, and G-Chef. Those are my 5 favorite pairs. Sometimes I will occasionally swap out for a few pairs, just depending on how that week is going. Maybe a US 30 or something like that. But primarily overall, these are the 5 pairs that I trade. And I like to keep it at 5 pairs. Those are the limit that I go on, and I don't really divvy too much from that. But for me, gold is probably my ultimate favorite pair. I believe that pair will lead me to financial freedom because I like the way it moves. It moves fast, it has big moves, and it follows market structure. For me, what sessions do I trade? The sessions that I trade mainly is the New York session. If alerts are set and confirmations are met, I would pretty much trade any session. So for example, let's just say if I marked up a pair and I set a sell limit or a buy limit or whatever the case may be, if that triggers my trade within that different session, then of course, I'm going to let it do what it do. I'm going to let it run and things like that. What sessions or times do you want to be trading? For me, I like to trade the London-New York overlap, and that's when New York first start, because London is actually still going on. So that's right around 6 a.m. to 11 a.m. Those are comfortable times for me. Are you going to set alerts for yourself and only trade when price hits those alerts? Yes, I set alerts all the time because you want to make sure that you have balance. For me, I feel like alerts set balances for your life. That way you don't have to constantly look at the market all the time. If you mark up doing top-down analysis, you can set your alerts, and when those alerts are hit, you can go back and look into the market and govern yourself according to where the market is at that particular time. Okay. I trade mostly daily, 4-hour, 15-minute, and 1-minute time frames. I look for breakup structures. I look for Fibonacci retracements, order blocks, imbalances, supply and demand zones, and Wyckoff schematics. Those are some of the things that I look for when I actually trade. Okay, so breaking down a pair, this is how I do it. This is what I use in my strategy. More times than not, I'll start off using top-down analysis. I'll start on a weekly time frame to find the story of that pair. Where exactly is it going? What the market looks like and things like that. Then I'll go to the daily time frame. I look at the current market, swing highs and swing lows. I find supply and demand zones, major price action areas, and things like that. Next, I'll use the 4-hour time frame to look at the 4-hour market structure, redefine my supply and demand zones, and then I look at price action and other confluences as well. I use the 15-minute time frame for breakup structures, and I use the 1-minute time frame for my entries. Now, when I'm trading Wyckoff, I look for a POI on a 4-hour time frame, and when price reaches that POI, I look for a Wyckoff schematic on a lower time frame. And then from there, I try to identify a trading range alignment. Like I talked about that in a live that I did not too long ago, where trading range alignment provides high probability setups. If you can see Wyckoff and you can see trading range alignment that can possibly line up with maybe a imbalance or maybe an order block or something like that, those are high probability trades. Another thing for that, I'll wait for a breakup structure and I'll look for that POI within my Wyckoff schematic. I'll set a stop loss at the body or the wicks of that POI. I set a TP at equal highs or equal lows, and then I let the trade play out. I'll set a limit and I'll let it play out. Okay. Now, as far as my entries, before I enter any trade, I'll use like a risk calculation. You know, I'll say, okay, my stop loss, my SL pips amount, multiplied by my desired lot amount. That way I can determine, you know, how much I'm going to actually risk on that particular trade. More times than not, I'll risk 1% of my total account. And so that's what I usually do. Sometimes I'll do 2%, but it's never really too much more than that, give or take. Okay. Another thing I tell myself, only take entries if 3 or more confluences are met. And I'll show you guys the confluences that I look for. But this is a side note for myself. Patience, patience, patience. Do not get FOMO. Wait for your strategy to play out. And always remember my favorite scripture, Isaiah 40:31. Okay. When the 15-minute break of structure happens, I use a Fibonacci to determine 50% pullback to determine my POI. Once my POI is hit, I drop down to the 1 minute. I wait for a break of structure. After that break of structure on the 1 minute, I use a Fibonacci to determine another 50% pullback, identify my POI, and then I take my entries. That's what I do when I'm looking for entries. Okay. Another thing, here are the confluences that I look for. And I only need 3 confirmations to hop in. 4 hour, 15-minute, 1 minute break of structures in that order. Imbalances, supply and demand zones, Wyckoff schematics, Fibonacci 50% or greater, trend lines, 4 hour tweezer tops or bottoms, Japanese candlesticks. If I get 3 confluences, that will confirm my entry, and I'm happy to hop in from something like that. Okay, I talked about stop losses and the calculations that I do. For me, I place stop losses under the 15-minute swing low or after a 1 minute entry. I focus on trades with 10 pips stop loss or less, but of course, you know, every single trade that you take won't be 10 pips or less. If a trade is more than 10 pips, I make sure that it does not exceed 3% of my account. More times than not, I won't even go that high anyway. And I place my stop loss at the body or the wicks when I'm taking Wyckoff trading entries. Okay. Now, for my exit strategies, I'll exit a trade at the 15-minute, 1 hour, or 4 hour liquidity highs or lows, depending on which direction I'm going. I use the nearest bank level or hold number for my TPs a lot of times. So those will be those hold numbers. When applicable, I'll exit a trade at the -27 extension on my Fibonacci levels. And if a trade is not going in my favor and or producing dojis or reversal candlestick patterns or a break of structure, I won't be afraid to get out the trade. And so for that, I trust my instincts. Okay. Make sure, this is a side note, make sure I can control my greed and my psychology, believe in myself and my trade. My risk management, refer to the first bullet in the entry section. If we go back to there, you can actually see what I was referring to, which is pretty much my risk reward calculation. I do not risk more than 3% of overall account, one or more trades at any given time. What is my risk to reward ratio? I do a 1 to 3, which is my minimum. Will I only place one of every trade? No, if the opportunity presents itself, I would take up to 2 trades that are equal or less than 3% of my overall account balance. How much percentage on my account will I be risking? I only risk a maximum of 5% of my balance. Okay, this definitely is old. I need to take this off. I would never risk 5% of my balance. However, I would not risk more than 3% of any given trade. Here's another side note for myself. When you trade, when you win a trade, walk away and soak in the victory. Do not take a second trade right away. Okay. Because a lot of times your endorphins and things like that would be so high off the trade that sometimes you won't be in your right mind. So if you win, walk away and just soak in that victory. If you lose a trade, do not revenge trade. Do not revenge trade. Do not revenge trade. If you lose a trade, there's always another trade for another day. Walk away, close your laptop, and be done with it. Okay? How do I track my progress? You know, for me, I would track my trades, successes or losses. You know, I've created a Discord channel to track my TPs and losses. And I'll show you guys that in a second. I use my FS book to track my percentage gains, and I'll always be willing to learn and seek improvement often. I can learn from anyone, and I don't just look at myself being some pro master trader or things like that. I don't even look at myself as being a master trader, because I learn all the time. Actually, I learn from you guys as well, from our crew within our Pips Discord channel. There are a lot of really good traders, and I learn from their successes and their losses and all of that kind of thing. I'm always ever learning and ever changing, so I love to learn, and there's always room for improvement. Food for thought. If your dreams don't scare you, they're just not big enough. That's how I look at it. So make sure you dream big. You always have room to grow. Embrace your journey and celebrate your victories. Learn from each mistake and focus on having a clear mind before trading. Make sure you get in the zone. And then I'll also put this on here. I, Gary Moses Sr., will follow my trading plan to keep myself accountable, to remind myself of my why, and to control my greed. This trading plan is the blueprint to reaching my goals and the key to my success. Don't let my bias cloud my judgment. Allow my thoughts to be fluid and flow with the market. Remember, Jesus is the center of my joy and the source of my strength. Patience equals profits. And here's my favorite scripture. But they that wait upon the Lord shall have thy strength renewed. They shall mount up with wings as eagles, and they shall run and not be weary. So wait, I say on the Lord. Okay. Now, I do want to show you guys my trading journal, and I'll come here to my Discord. So check this out, you guys. As you can see, this is Gary Moses Trading Journal. So within here, this is where I track my TPs, I track my losses, I have notes, resources. I like this, when I'm doing back testing. I like Discord because you can set different channels for different things. I also have my trading plan in here as well. That way I can remind myself and always have access to it. When I'm doing different markups and things like that, different, smart money concepts, tips and tools and all of that kind of thing, So I utilize Discord a lot, for my trading journal. Because for me, it's efficient. It's a free tool, and you can utilize it to organize yourself into different things you do. And of course, we have our Pips Academy trading, our Pips Academy community as well. But for myself, like I said, Discord is a really good tool that you can use to create a trading journal and things like that. Okay. So you guys, once again, I want to thank you guys for rocking with me. I hope you guys learn what a trading plan is and how to create one. One thing that you want to be mindful of is if you're just starting out, you might not have all of the tools that you need to create a trading plan, but you can start it off with your why and things like that. Then once you start back testing and you start trading with the demo, you start understanding how you trade, what you like, what sessions and things like that. From there, that's when you can start actually developing that trading plan. And from there, make sure you utilize your trading plan and make sure it makes you accountable. You want to get in the mindset of trading robotically. That way you're not trading with emotions, and you're trading robotically, where you look at a certain set of guidelines and your blueprint and you trade according to that. Hey, you guys, once again, thank you for rocking with me. I hope this was informative for you, and I'd like to thank you for watching.